Hello and welcome. I hope that you are having a fantastic day. Today we're going to talk about cryptocurrency news. We're going to look at a weird Bitcoin golden cross pattern. Could this be good news or bad news? We're going to look at a bullish crypto trifecta. And finally, the IRS is tracking cryptocurrency. So let's get into it. Can we get 99 likes on this video? Smash that like button. It sure helps us out. I'm not a financial advisor. This is not financial advice. This is my opinion. So this weird Bitcoin pattern suggests Wednesday's 10% drop in Bitcoin's price may precede a massive surge. So let's take a look at it. A traditional golden cross is a technical analysis when an asset's 50-day simple moving average crosses above its 200-day moving average, suggesting that a decisive bull trend is forming. An Investopedia article further explains the subject matter. As long-term indicators carry more weight, the golden cross indicates a bull market on the horizon and is reinforced by high trading volumes. It is interpreted by analysts and traders as signaling a definitive upward trend turn in the market. Cryptocurrencies cratered from the $10,300 daily high on Wednesday to as low as $9,250 on some exchanges, a drop of around 10% in a matter of hours, liquidating hundreds of millions of dollars worth of leverage positions. Now this is the most important part. So here's a chart that shows what happened. Bitcoin is kind of traveling along, doing its thing. Little bump up, a little bump down, and then all of a sudden it takes this massive 10% drop all the way down to this point, 9,200. It quickly recovered to about the $9,600 price range and has been treading around 9,600 since that time. Right now it's 6:25 a.m. Central Standard Time on February 20th, 2020. And so this big drop of 10% liquidated anybody who had leverage greater than 10x. And as you may know, there's a lot of exchanges out there that will give you as much as 125x leverage trading. Now, what does 125x mean? It means with $1,000, you could actually buy $125,000 worth of Bitcoin and do it on either a long or a short. A long meaning you're betting it's going to go up, and a short meaning you're betting it's going to go down. The problem with that kind of trading, let's take 100% because the numbers are easier for me to figure, 100x instead of 125x. But at 100x, that means you're putting up $1,000 and you're getting $100,000 in crypto. But here's the problem. If the price drops 1%, in other words, drops below the initial $1,000 you put up, they're going to immediately liquidate your account and they're going to keep your $1,000. And so normally exchanges only make 0.5%, somewhere thereabouts in terms of a fee when you buy and sell crypto. But this is an opportunity for the exchange, instead of making 0.5%, that they can get 100% of your investment, of your capital that you put out on the exchange. And so what do you think the crypto exchanges are motivated to do? Should they collect 0.5% or 100%? Well, they would rather collect 100%. And that's why they're more than happy to offer people 100x leverage trading, because all you need, not a 10% drop, but a 1% drop to leverage anybody's account that actually took that 100x option. But this 10% drop wiped out everybody's account that used 10x. And so, in other words, the 10xers, the 11xers, the 50xers, the 100xers, all of them that were long got completely wiped out. And the exchanges got 100% of those accounts, because this happened within a matter of an hour or two, and people would not have had enough time to actually liquidate or sell off those accounts. Now, if you had put in a stop loss, that would have helped. But this moves so fast that even with a stop loss, you can still lose all your money, because your stop loss would say, okay, I'm going to put in a buy or a sell order. And the sell order may not get completed before the price has continued to move past your stop loss to a point where you lose 100% of your funds. Because when it's moving fast, you may not be able to get your order in quick enough in order to prevent a massive liquidation of your account. And that's what happened yesterday. Is in a matter of hours, hundreds of millions of dollars worth of leveraged positions were liquidated. Bad news for a lot of people. Now, what we're talking about, though, is this weird pattern that Bitcoin has had. And so, what is the weird pattern? Well, the weird pattern is Bitcoin dumped 11% 2 days after the last golden cross in April 2019, and then proceeded to rally 170% to $14,000. And then the time before that, it did the very same thing. In fact, when it actually had a death cross, which is the opposite of a golden cross, it did the very same thing. It jumped up dramatically before it went down. And so a golden cross indicates, a death cross indicates that the price is going to continue going down. A golden cross indicates the price is starting a new bull trend. And so both of them seem to be trending with an opposite drop of, say, 10%, and then it continues in the direction. In this case, it takes a 10% drop and then goes up. And in the case of the death cross, it would jump up 10% and then come back down and continue in a downward trend after a death cross. So indeed, golden crosses have historically preceded the cryptocurrency's biggest uptrends higher. More specifically, data this writer compiled shows that the golden cross in 2012 led to a 78% surge in the price of Bitcoin, and that a golden cross in 2015 led to the 6,739% rally that took Bitcoin just shy of $20,000. So the behavior of a golden cross is typically upwards, but as we could see from this drop yesterday, it took a significant drop downward first, and apparently that's a pattern that it does. After seeing a golden cross or a death cross, it tends to go in the opposite direction very strongly, very rapidly, and then it continues with the trend indicated by that particular cross. So I think one of the reasons why we're seeing these significant drops is because of things like 100x leveraging. It gives the exchanges an opportunity for people to go ahead and, a golden cross has happened, let me get a whole bunch of leveraged account, and then they liquidate those accounts. So unfortunately, I don't like that. I think that's wrong, but it happens out there, and it seems to be a opportunity for the exchanges just to pocket a lot of money. Now, a crypto trifecta is coming in 2020. So what they're talking about here is there's 3 different events happening in 2020 that will be extremely bullish to the cryptocurrency market. Here are the 3 critical triggers to watch out for later this year, creating a crypto trifecta. First is the Bitcoin's next halving. Now, the Bitcoin's inflation rate will drop lower than the US dollar's inflation rate. Bitcoin's supply is reduced, which causes buying pressure. And while the US dollar can inflate higher in times of need, such as for the pending US debt crisis, Bitcoin cannot. So they cannot increase the amount of Bitcoin created. Gold, for example, has defended itself as an international store of value and medium of exchange for thousands of years. However, unlike gold, Bitcoin can be exchanged with minimal effort and does not impose much of a physical burden to transport or store. The next part of the trifecta is BAT's payment app and Starbucks partnership. BAT.X, the cryptocurrency exchange owned by the Intercontinental Exchange, which also owns the New York Stock Exchange, announced in October that it is planning to launch a consumer payment app. Starbucks was listed as their initial launch partner, and many were quick to report that this new partnership would let customers pay for items with Bitcoin, which is a massive move in and of itself. And this comment here does not point out that Starbucks is a joint owner and partner of the BAT.X exchange. And so they're a lot more than just planning on launching the consumer app. They will be profiting from the consumer app. So Starbucks is heavily invested in the success of this payment app, as well as Microsoft. And then, of course, the company that owns the New York Stock Exchange, the company called the Intercontinental Exchange, and they own lots of different exchanges all around the world, and they're a very, very successful business. And so a lot of people wrote off BAT.X after it having a slow start, but don't write them off completely, because obviously with this payment app, they have big plans for the future. The third part of this trifecta is China's digital yuan. The People's Bank of China announced in 2019 that it was almost ready with its cryptocurrency backed by the yuan, and that the currency was inspired by Facebook's Libra, according to reports by Reuters. China is posed to not only create a digital currency that will likely be used by a large chunk of the population within China, but also become a de facto global digital currency in emerging economies. Since the cryptocurrency can be used without access to the internet, it offers significant value to the world's unbanked people who lack access to adequate technological infrastructure. In other words, they don't have access to banks. There's countries where 50% or more of the population do not have a bank account. And so things like the China's digital yuan and other cryptocurrencies such as Bitcoin and others allow people in unbanked areas actually to create a digital bank account that's not linked or managed by a business. And that's a big part of the reason why there's so many people that are unbanked in certain countries, and that's because the banks have a tendency to be corrupt. You put your money in there, and all of a sudden your balances start going down, and you didn't spend anything. And so, because of corruption in different countries, people have a tendency to protect their funds by not opening a bank account, whereas cryptocurrency gives them a trusted platform that they can deposit money and buy and sell goods and trade for things. And then as a bonus for this trifecta, they mentioned Facebook's Libra. But the big caveat about Facebook's Libra is its launch date is likely to be delayed due to the large level of regulatory backlash. Despite this, it is important to note the Libra is still moving ahead at full speed. In November, the project announced it had over 30 projects built on the Libra network and had logged 51,000 transactions on its testnet. It's definitely a project worth watching because its success or failure could have major implications on the future of digital assets, international money transfers, and the lives of unbanked people around the world. And so, while Libra took a significant knockdown by all of these different government agencies that literally freaked out once Facebook announced Libra, it's not down for the count. It looks like with 51,000 transactions on their testnet, they're moving forward. And so it's just a matter of time. Now, one of the things that we mentioned up here is the Bitcoin's next halving. I'm going to give you a link, like I always give links to all the articles that I discuss in my videos. But I'm also going to give you a link to the Bitcoin block reward halving countdown website. And this website, if you're interested in getting more information and understanding why the halving is so significant and what exactly is the halving, this website will give you a ton of information, as you can see. And so it's worth learning more about. And then finally, How does the IRS track Bitcoin and other cryptocurrencies? Ask the average person to tell you what they know about Bitcoin, and they will invariably give you two answers. It's valuable and it's untraceable. The second point, however, is flatly inaccurate, a common and in some cases dangerous misconception. Contrary to popular belief, cryptocurrency is not anonymous, and neither are those who mine, invest in, or profit from cryptocurrencies. Though this will be an unpleasant news for some taxpayers, the Internal Revenue Service is increasingly adept at tracing digital currencies around the globe, and with the support of international agencies like Europol and Interpol, it is only getting harder for crypto users to hide. The IRS goes straight to the heart of the system by consulting with blockchain companies, notably Chainalysis. This allows the service, the IRS, to stay one step ahead of money launderers, drug traffickers, drug dealers, human traffickers, and yes, suspected tax evaders also. And so I'm going to skip this part down here. They got kind of technical. Here's the bottom line. The IRS is tracking cryptocurrencies, and so if you have bought or sold cryptocurrencies because there's a question about it on the 2019 IRS 1040 tax forms, you're best if you actually report any cryptocurrency tradings that you've received during the year. And so if you need additional information, it's strongly recommended that you get tax advice from a tax professional. And if you did any kind of amount of cryptocurrency trading throughout 2019, I also recommend that you get some kind of software that'll help you harvest your tax or harvest your cryptocurrency trading and help you generate your profits and losses so that you can adequately report them on your tax returns for 2019. I've used a service called Zen Ledger, and I do have more information about Zen Ledger in particular in the comments. So if you're not watching this on YouTube, click the links to go to and watch this on the YouTube website. And in the comments and description below, you'll find a special report that I put together on harvesting your cryptocurrency trading so that you can report it to the IRS. I strongly recommend that if you had any kind of cryptocurrency tradings throughout 2019, that you report those tradings accurately to the best of your ability, because it could be very significant for you and your family. So, in conclusion, how can I be of service to you? Do you have any questions that I should talk about it more in depth? Was there something that you wanted me that I didn't really was clear about, or you just want to ask me a question? Please feel free to do so. Also, if you disagreed with what I said, look, you know things I don't know. I know things you don't know. And when we share our information with each other, we're going to grow smarter together. I want to grow smarter together with you. So leave your comments down below and we will move ahead. In the meantime, like, subscribe, and hodl, and I hope that you have a fantastic day.